So basically, just understand that price tells when time tells price when it can move. Basically, so the first thing we're going to talk about is just basic time windows. These are pretty common knowledge. First things that we have are kill zones. Kill zones are specific time windows during the day when the market is most volatile and active because there's a lot of institutional traders trading at this time. So if you trade forex, these are your kill zone times. London and Asia are the exact same between indices and futures. It's just the AM session is a little confusing. New York AM is kind of similar. It starts at 7 to 10, while New York AM for indices is 8:30 to 11. And then we have London close. So I'm not too familiar with forex, but I guess London close is within New York session. So London close is from 10 to 12, and then New York PM for indices is 1:30 to 1600. So the reason why these are extremely important is because, well, there's a lot of institutional traders, right? We want to be following smart money as they enter their trades, right? We want to be following in their footsteps. That's what ICT is all about, finding, footprints of smart money. So if we see a footprint, can everyone hear me? Okay, so it's probably just you then. It's fine. I'll have this recorded, so if you can't hear me, I'll post this as well. So you don't have to worry too much about it. But as we continue, right? Why would a footprint, such as a PDA array, right? Why would a footprint matter if the smart money isn't there, right? If we think about it, right? Just because we see a footprint, let's say an imbalance, doesn't mean smart money's entering at that level, right? So that's basically the premise of kill zones, entering when smart money is most active. Macros, these are another specific time windows within kill zones. These are more used as a confluence. Kill zones are a must. I only trade in kill zones. That is a must. But for macros, it's more of a confluence. So macros are basically time-based intervals. They're usually 20 minutes, centered around certain points in the hour. And it's basically a time where the algorithm is more likely to make decisive moves, such as running liquidity or filling inefficiencies. So just basically simplify it, basically be like, if you're entering a trade within a macro, it's a high probability it works out because it's going to be targeting liquidity, which is what we want to trade into, right? So times of a macro, it's always the last 10 minutes of any hour and the first 10 minutes of the next hour. So it's whatever hour 50 to the next hour's 10. So for example, 9:50 to 10:10 or 10:50 to 11:10, right? Old hour, new hour. There's some special macros that don't follow this exact pattern. We have lunch macro, we have final hour macro, and we have final close macro. These should not be reasons why you should be taking trades near the end of the day. I rarely take trades at the end of the day, but I do like these as a confluence, especially when I do take trades close to the hour a day. I don't really use lunch. The only one I really use out of these three is probably final hour macro. This is the primary one that I use because sometimes I do get an A+ setup near the close of PM session. Best macros, in my opinion, are 9:50 to 10:10. This helps in longer than usual Judas swings of 9:30. So sometimes 9:30 will Judas swing, but it won't completely expand. This usually helps that out. So if I'm entering, of the 9:30 Judas, I like having 9:50 as a confluence. And then 10:50 to 11:10, it's in the New York Silver Bullet. It's very late, so it might be a later entry. It also frames continuations very well, and it also helps when New York AM session is kind of slow. So if you have studied Gaddy stuff, you have seen him use the 10:50 macro a lot, and it is very convenient once, for framing continuations or when, New York AM session is kind of slow. Please save all questions. I know I see you guys request to speak. I will get to that after the lecture, so I do see y'all. Opening prices. So this is another time-based concept, right? Understanding, time-based, premium discounts and buying and selling opportunities, right? So key opening presses, these are the ones I use. These are the ones I personally use. For people that can't hear, I'll put it on I'll post it on my YouTube, so you guys don't have to worry too much. And then for any questions, you can always ask me later on, right? So key opening presses, midnight. That's New York midnight, so that's midnight, New York. All these times are in EST. If you guys are not in EST, I would recommend putting your charts to EST, even though you're like in like a different country or something like that. So midnight session, midnight is the true day open, as this is truly a new day, right? It's common sense, right? Midnight, new day, right? So this is where many of the algorithms are reprogramming here instead of 1800. 1800 is standard futures opening. So if you see, so we close obviously at PM session, and then we have an hour of no trading, and it reopen at 1800. But usually that's why Asia session actually follows the trend of the previous day. So midnight is true day open. We have 8:30 New York news embargo. So 8:30 is when a lot of important information comes out, a lot of economic data. It's a big macro factor into this, right? So a lot of U.S. news are released here. Doesn't have to be red folder. It's not just red folder. A lot of red folder news are released during this time, right? But it does not have to be red folder. It can be orange folder. It can be yellow. It can be. It's a lot of different datas, and that's why most algos are here. It's because this is the first volatility injection that we have in the biggest trading session that we have, which is New York, right? 9:30 New York Stock Exchange open. This is very important. Obviously, we bring in a lot of new buyers and sellers into the marketplace. So the reason why is because a lot of stock market traders are trading SPY, which is the S&P 500, which is ES, and QQQ, which I'm pretty sure is NASDAQ, which are basically the correlated assets to ES and NQ. And then there's also YM in there, the Dow, right? And you got the Russell 2000, which is RTY. So you can see a lot of the future contracts that we trade are have direct correlation to stocks, right? And then we have red folder news releases, as I said, 8:30 most of the time, right? But they can also be at 9:45, 10 a.m. Use forexfactory.com, and it is used to by smart money to enter and to move price sharply. And the reason why sometimes when price, like sometimes you'll get like bullish news, like news would be good, like we beat like I don't know unemployment things, right? But the market will still move lower because a lot of people are gambling on news and stuff. Smart money will use that volatility to put in their positions, and that's why it moves lower, right? So this can trick traders and cause them to take losses, and market will behave irrationally or at extreme swings. So that's when you see 8:30, you see those big wicks, usually with CPI, see those large wicks, and we'll talk about that. Caution news protocol. Basically the protocol is not trading the session or anything prior to news. So that means the session before it. So it doesn't mean that like if we have high impact news on a Friday, that doesn't mean I won't trade Thursday. I'll just wait for that high impact news to come out. So there's only 3 news drivers that I really don't trade prior to. These two, they're 8:30, so I'm basically always trading after 8:30. So those two don't really matter. And then we have FOMC, which is the only one I do sit out with. So FOMC is always during PM session. So it's 2 parts, one at 2, one at 2:30. So that means no AM session for me during that day. Market is usually ranging because FOMC is such a big event that it's most people wait for when that thing opens. So why do we use opening prices? They're a key support and resistance line, and they're also primarily for premium discount, right? So not the primary use, but key opening times can be used as a support and resistance. Usually that's 8:30. Usually it's very key at 8:30. 8:30 is probably the most important one, but I use it more as a confluence. So if I'm in a trade and I see it, you know, let's say we sweep liquidity, bounce off 8:30 open, right? That's more of a confluence. And basically anything above an opening price is premium. Anything below the opening price is a discount, right? Basic, so premium discount. To engineer the Judah swing, this is the primary focus for opening prices. This is where we take time and we put it with price, right? So price is a Judah swing. Time is when smart money is looking to buy or sell at a key opening price. So very simple, right? Smart money pushes price above the opening price. Retail buys breakout, liquidity provided. Smart money sells into that premium, right? So basically, smart money is always looking at getting into a discount, right? They want to get the best possible price, and smart money will buy in a discount. So best possible price, right? So it's basically smart money buys below the opening price on bullish days, and it sells above the opening price on bearish days. So that basically allows us to use time to identify when smart money is buying or selling, right? So this is combining time with a lot of aspects, right? We're trading inside of a kill zone, so we know that smart money is inside the positions, and we know that price is, well, we already know that smart money is looking to align the positions at this opening prices, right? So it combines time and price. So this is the Power 3 and Judah swings. This is going to be a very simple overview, as I'm sure a lot of y'all know what this is. So Power 3, accumulation, manipulation, and distribution. So accumulation, this is where smart money accumulates positions quietly. Often happens in consolidation, so you'll see ranges, and liquidities gathered around obviously the highs and lows. Then we have manipulation, we break it, it's a fake breakout, we take liquidity, and then distribution moves higher. And true distribution, you should have see institutional order flow. If you were here for my last class, you'll definitely see that. And you should see displacement through fair value gaps. You do want to see retracements, that's where you want to get in, but you will have breakaway gaps, and if you know how to identify them, then it will be a very good telltale signal of true distribution. So Power 3 and time, remember price only moves when time allows us to. So for manipulation, it's needed to move price, right? That's the price aspect of moving price. Duh. And because for a winner, there must be losers. Time tells when the manipulation should happen, as only at key times is smart money looking to manipulate retail. So this is what I was talking about. Manipulation will most likely occur during key time, kill zones and macros, where they are active, and during a time where there's enough volatility, key opens, right? Especially with news and 9:30 for them to enter. So the last thing we have to talk about based off of time is time-based levels / liquidity. This is price and time based off your levels. So we're going to go over time-based levels first. We have new week opening gap, new day opening gap. These two are obviously very similar. This one only happens once a week. This one happens every single day. So it's basically a new week opening gap. It's the gap between Friday's close and Sunday's open. ICT says to have the last 5 marked. I personally only use the most recent one. So the reason why is because personally, I think it's too messy on my chart, and I don't like that. How you use it is very simple. It's an imbalance, so look for it to get filled, right? It's a gap. It's also a key algorithmic reference point, so the algorithm will use it to send price in its desired direction. So that's why I usually see during the week, after we break off out of let's say if we're bullish, right, and we break above new week opening gap, we'll see the run above it. That's the algorithm using that level to send price higher. Same thing with the new day opening gap, right? Opening gap between 2 different days of the week. So Monday is closed, the 2 days open, right? Same use as NWOG, imbalance, algorithmic reference point. Now the regular trading hours opening range gap, So RTH hours is PM close to 9:30 New York Stock Exchange open. So you don't see any pre-market, you don't see any London session, you don't see any Asia session, and it is a key time-based imbalance as many traders are trading during regular trading hours. Right, you got to understand that while yes, London and Asia do have volatility, New York has the majority of it. Right, so oh shoot. So it's very simple to gap. So a discount gap is a gap that opens lower. A premium gap is a gap that opens higher. If we're bullish, what we can use this for is if we open lower and we expect the price to go higher, we expect price to fill it. So very key draw on liquidity, right? Premium gap opens higher, right? If we're bullish, we expect price to trade into that gap, just like a fair value gap, ideally around 50% or less, or to send price higher. So it's just like a fair value gap, depending on your narrative and your bias, you will see it in different ways, either as a draw on liquidity or a PDRA. So the last thing that we have to talk about is time-based liquidity. These are the ones I primarily use. Anything previous, you can probably use anything like previous day, previous session, previous month, previous year, anything previous, right? These are the two I primarily use because I am a day trader. I only focus on intraday stuff. So these are the only two time-based liquidities that I really focus on, that previous X something, right? And the logic behind it is that during the previous day, these points were heavily defended by sellers or buyers. And in order for that to be a high, a lot of sellers or buyers have to defend that area to push price in their desired direction, right? So that's the logic behind previous session, previous day. It can be previous month, right? Last month, this area was heavily defended by buyers, so that's why there's a low. A lot of buyers have their stop loss below that area. That's just the core logic behind it. Data wicks, right? These are very long wicks during high impact news. It's very easily seen. There's just super long wicks that you're just gonna see, and you're gonna be like, why? Like, this wick doesn't make sense. It's not logical. And if you usually look at Forex Factor, usually it's because of 8:30 news or some high impact news. So that's all I have to talk about today. I was gonna do the market recap for today, but I did not expect CME to be down, and for us to have absolutely no trading data to work with. So right now I'll just open the class to any questions, any concerns, anything like that. You can ask me now, or you can always just at me on Discord. But if no one has any questions, y'all are free to leave. Anything like that, I will be in here answering any questions though. So you can either raise your hand to speak, or you can put it in chat if you don't feel comfortable talking. So is SMT the best strategy to trade gold? SMT isn't really a strategy. It is more of a confluence for price. So ideally, you want to see an SMT form at your entry or at some place. So you ideally want to see SMT at a key point of interest for you to get a market structure shift or a change in state of delivery. It's not really a strategy. It's more of a confluence. It is probably the best confluence out there. It's probably the best confluence, but it is not their own strategy. I guarantee you, if you just look for an SMT and you enter off of that, I guarantee you will not be profitable. Well, you will lose probably more times than not, but it's really not a strategy. It's more of a confluence. But like if you put an SMT with like a key level and change in state of delivery. So a simple example would be the 2022 model. Be like, okay, we have an SMT and then we have a market structure shift. Right? That's higher probability, right? So I'm gonna let I think he left. I think so. All right.
Hey.
Hey, what's up?
Thank you for the session.
Yeah.
I think for me, I just started learning ICT concepts in
Okay.
May, and so I understand them individually. However, when I enter the chart, I get confused on how to target liquidity. So I do understand session liquidity, news candles, and things of that nature, but I think I don't understand the significance of them, if that makes sense.
Okay. So it's very simple in the way with previous something, previous session high, previous session low, previous day high, previous day low. In order for a high or a low to be established, there's a lot of buyers. So for a low, right, at a certain key area, we knew that buyers were stepping up in a given area, right, because they defended that area and they created the low, right, and that's basically the psychology behind a swing high or swing low. It's an area where buyers and sellers defended very heavily, and the only way they can defend is obviously with a bunch of orders, right? So if a bunch of people sold at a high, right, their stop losses are going to be at the high, so there's going to be a lot of liquidity for us to target. And then for data wicks, and they're basically very inefficient price movements because high impact news moves price so much to the point where inside of those wicks, this is a little bit more advanced of ICT. Big wicks like that are often seen as an imbalance. So those wicks are often acted like a fair value gap and they want to trade through that, if that makes sense.
Okay, thank you.
Yeah, I got it. So what confluences do I use to enter a trade? I don't really I don't grade my trades. Like I know a lot of people in grade their trades like, oh, we had SMT, we had a macro, we had this and that, and so this would obviously be A plus. Um, I personally don't do that. The confluence I primarily use are SMT for one. SMT best confluence all time. No question, no ask. SMT best confluence. Macros, right? I talked about macros. I personally, only use macros as a confluence. I don't require a macro to enter a trade. Um, that's basically the only two confluences I really use because my model is that my model is so selective to the point where all the confluences I really want are already present when my entry model presents itself. So there's not many confluences I can really use because most of the stuff I want is already in my model, and those things I require basically. So hopefully that makes sense. I know that's kind of a weird explanation. So my model, I will get into this more in the next class, which is on Sunday. Um, that's that is going to be where we take everything that we learned from the first two classes, right, and we put them together into one. We put them into the model. But just to quickly explain for you, my model is to identify protected highs and lows, right? So I'm looking for a protected high or low on the weekly time frame or the weekly power of three, right? Because the weekly wick is a protected swing, right? So I know for a fact, based on the weekly candle, we are not going to touch this level, right? So from that, I look for a daily protected swing, right? So that's basically where the daily wick is going to form off of midnight, right? I explained how I don't use 1800, which is technically the futures open, but I use midnight, right? I'm looking for the protected swing of the daily candle in relation to midnight instead. So from a weekly protected level or the weekly wick, right? Weekly wick, I know that's a protected low. I don't want to see that get traded to. I confirm that with a daily wick protected high or low, and then after that, I then look for the New York protected high or low. So basically, I'm just fractalizing. You know how I talked about how time is fractal, right? Um, how you will see a protected low on many different time frames. So the idea of a fractal protected swing is that the market will protect a protected swing with lower time frame protected swings, basically. So that's basically my model. Looking for a higher time frame bias with the weekly power of three and that protected swing to a daily power of three with that protected swing, and then the AM session protective swing, and obviously with PM session too. So, but like, if you don't understand, I will have that class on Sunday, and that's gonna be the last one for at least my model. I'll probably do more classes, but I'm gonna have to like think of like what to come up with basically. So yeah, so if anyone has any other questions, concerns, you can always ask to speak, or you can put it in chat if you don't feel comfortable. And as always, like if you don't want to ask right now, or if people, I know some people are busy, you can always just add me on Discord, and I will do my best to answer. So I guess no one else has any questions. I just want to thank you guys for coming out to support. Just want to thank you. You guys have a great day. Hopefully you have a great weekend, and I will see you guys on Sunday. So I gotta finish the slides up for that, but I'll see you all on Sunday.